Good morning, students. In this session, we will discuss basic concepts of income and tax. India has a well-developed tax structures with clearly demarcated authorities between center and state governments and local bodies. There is clear allocation of resources among center and state under Indian constitutions, meaning thereby it is given in constitution that which are the taxes levied by the central government, which are the taxes levied by the state government, and which are the taxes can be levied by the local authority or local government. Central government is authorized to impose some taxes like income tax, wealth tax, excise duty, custom duty, etc., while state government may impose tax on sale or purchase of goods, excise duty on intoxicants, and land revenue, entertainment tax, etc. Whereas the question of legality and constitution provision is concerned, Article 265 of Indian Constitution have laid down that no tax shall be levied or collected except by the authority of law. It means tax to be levied must be within the legislature competence of the legislature imposing the tax means nobody can impose any tax other than the government, and the government can only impose the tax within its rights, within its authorities. Article 246 read with schedule 7 divide the subject matter of law made by legislature in three categories. There is union list, which is under the authority of central government. State list, only state government has power of legislature to subject matter in this list. And the third is concurrent list. Both center and state government can pass the legislature in this subject. But if the state legislature state relating to any entry list number 3 is repugnant to the union law relating to that entry, the union law will prevail and the state law shall, to the extent of such repugnancy, is to be void. Means center is supreme and the state is subordinates. Whereas the income tax is concerned, Union List 1, Entry 82, tax on income and other than agriculture income can be levied by the central government. Means the right and power to levy income tax has been given to the central government by the Constitution of India. But the central government cannot levy tax on agriculture income. Agriculture is a state subject which is given in list 2 entry 46, in which the tax on agriculture income can be levied by the state government if the state government want to levy any tax. Otherwise, agriculture income is exempted from income tax by the central government. Tax. What is tax? Tax is compulsory payment to government by taxpayer without any exceptions of some specified return. It is source of income to government while paying tax. The taxpayer is not entitled to force the government to give something to him in return of the sum he has paid as a tax. Means the the government the tax is the source of government to income, and only government can levy the tax. But the person who is making payment of tax cannot ask the government to repay something in against the tax he has paid. Characteristics of a tax: a compulsory payment. A tax is a compulsory payment. Nobody can say no to pay the tax if it is levied by the government. Tax is a payment to government by the public. Obviously, the tax is paid by the public and not by the government. And the public means organizations also includes. Tax are paid by the person and organizations. It is clear. Tax is a legal provision under which the tax is paid to the government by the citizens of that country. The benefit received is not directly associated with the return of tax. Whatever the government do for the citizens is not directly related to the tax we have paid, but it is indirectly related. Element of sacrifice. Tax is a sacrifice. We cannot expect anything in return. Payment for welfare of the common people. The tax paid by the common people is used for the welfare of the common people. Tax adversely affect the monetary condition of taxpayer. Obviously, it goes something out from the pocket and it reduce the in-hand income of the taxpayer. Tax increase the purchasing capacity indirectly because government perform various things for the public. Such, for example, it provides subsidies, it provide various facilities, hospital, education. So in this way, it increase the purchasing capacity of the taxpayer. Various type of tax. Tax is not a single type, but it is different type, that is direct tax and indirect taxes. Object or aim of taxation. What are the objective of the government to raise to take tax from the public? First of all, raising public revenue, it is the source of income, source of revenue to government, and government raise it through the taxes. Reduction in the inequality of wealth. In India, the taxation system is progressive, and the rich people have to pay more tax while the poor people pay less tax, which make the inequality equal in the society. The aim of tax collection is for public good. Government do some many things for public, for which government collect tax. Restrictions on production and use of harmful goods. In this is related to indirect taxes. Government impose heavy taxes on the harmful goods, just like tobacco, cigarette, wine, etc., to reduce the use and production of harmful things. Regulation of import and import. Government impose import duty and custom duty on goods to regulate, to control the import and export. Now coming the type of taxes. Taxes are basically of three type, basically of two type, that is direct taxes and indirect taxes. Direct taxes are levied by the central government only, and it includes income tax, corporate income tax, and wealth tax. Indirect taxes are levied by both central government and state government. Central government levies GST, goods and service tax, which includes many taxes earlier. Now it is the single tax, that is goods and service tax, and the second is custom duty, which is levied by the central government. Excise duty, service tax, and other taxes have merged with the GST. State government have right to collect indirect taxes, and it includes the state GST, SGST, state goods and service tax, excise duty on liquor and other narcotic drugs, and value added tax on diesel and petrol, which are not came under the purview of GST, goods and service tax. There are certain taxes levied by the local government which are as follows. There's a water tax, sanitation tax, octroi tax, market tax, house tax, entry tax. These are collected by the local authorities, panchayat, municipal corporation, etc. We can understand the direct taxes and indirect taxes from the following example. Direct taxes are the taxes which are borne by the taxpayer directly. Ultimate burden of the tax payment is on the individual, and responsibility to pay the tax is on individual. For example, income tax. If I am earning some income, I have to pay the tax myself, and I myself is responsible for my direct tax. On the other hand, indirect taxes are the taxes collected, paid by the public through other people indirectly. For example, the sale tax or GST, and the ultimate burden of the tax payment is on the public. But the responsibility to pay the tax is with the shopkeeper or the service provider. So indirect taxes are paid indirectly by the public. Direct taxes are the tax paid directly by the public. And direct taxes, for example, income tax, indirect taxes, just like value added tax, and now which is GST, goods and service tax, paid by the service providers or the market man, but it is collected by the supplier or the seller from the public, and the ultimately public burden is on the public. Merits and demerits of direct taxes. Merit of direct taxes: equitable. It equate the income and wealth level of the public. Elastic. It is less for the poor people and more for the rich people. Civic consciousness. It is the contribution by the public to the government. Reduce inequality. It reduces the inequality in the public by because the rich people have to pay more tax from their earnings. Economy. It is helpful in the development of economy by providing extra income to the government. Certainty. The indirect taxes are certain and fixed. There is no ambiguity in direct taxes. Absence of leakage. Whosoever earning anything have to pay income tax. There is no leakage from this. There is no leakage or corruption in the direct taxes. Educative value or educative value. Educative value means the sense of responsibility towards government. Demerits of the direct taxes: unpopular. The public don't want to make payment of the direct taxes. Inconvenient. It is in people have to go to some chartered accountant or some expert to pay the direct taxes. It is not as simple as it is think. It is very complicated. More possibility of evasion due to complication and unpopularity. People want to evade the tax, don't want to pay the tax, avoid the tax. Possibility of injustice. There are certain people they are not paying any tax, and there are certain people though they are coming, those who are getting the white money just like employee, they are paying more tax, whereas uh, the seller in the market, they sell the goods justifying their income. So it is injustice with the poor people, whereas the rich people are avoiding the tax. Narrow based. Only some people are come under the direct taxes, whereas the most of the people are come under indirect taxes. Not so economical. It is not uh, very good for economy because the amount and the base of the tax is very less. Discourage saving. It discourages saving. If you save something, if you earn, if you invest and earn something, then you have to pay the tax. Corruption. There is corruption in the market. People don't pay tax, whatever actual they earn, they pay for less, and generation of black money because there is taxes, heavy taxes in the system. So people don't want to disclose their money. It generate the black money or uncounted money, which is very dangerous for the economy. Merits and demerits of indirect taxes. Merit of indirect taxes: high revenue giver in the developing countries. Developing countries uh, charge more indirect taxes in place of direct taxes. So it is the direct source of income to the government. Convenient. It is very convenient for government to collect the indirect taxes because it is collected through the other people, that is trader. Elastic. It is also elastic. There are at some goods and services there is less tax, and there are some goods and taxes it is heavy tax. Productive. It increases with the sale and production. Lower collection cost. Collection cost is very less because it is collected through the middleman, the seller. Slightly less tax evasion. It is rather little difficult to evade the tax because the sale and purchase have to be recorded on the books. Can be progressive. It increase on non-compulsory goods or luxury goods and decrease with the compulsory goods like rice and flour. Psychological advantage to taxpayer. It increase the uh, of benefit of the seller because it gives psychological advantage that he is paying tax. Rational and equitable. It is rational and equitable uh, to all the persons paying the tax, and it is allocation of resources to all the public. Helpful in capital formation. It create money with the government, and government invest in public welfare schemes and invest in schools, hospitals and roads, etc. Balance of regional development. It increase it decrease the balance in the regional areas. Broad based. It is levied on everybody. And social welfare. Money collected from this is spent on social welfare. Demerits of indirect taxes. Number one is regressive, means it is not progressive. It is levied on all the people, whether rich or poor, equally, because the rate of indirect taxes are same for rich and poor. Uncertainty. It is uncertain whether the seller is making payment of the tax to the government or not, although he collect from the public, but sometimes they do not deposit it with the government, and it is uncertain of uncertain income of the government. No civic consciousness. Civil or the public is not much conscious about the indirect taxes because it is the sole responsibility of the seller or the service provider to pay the tax to the government. So the public have least concerned about the indirect taxes inflationary. It increase the cost of the product to the public because cost plus tax is charged from the public. So it increase the inflation. Tax evasion. Generally, shopkeeper seller want to evade the tax. They do not want to pay the tax. Loss of consumer surplus. The seller, those who are making payment, the honest tax have to reduce their profit because they have to pay the tax out of their profit. Encourage dishonesty and corruptions because there are many taxes, rate of taxes are very high, so it encourages the dishonesty and corruption among the seller or the shopkeepers. That is the bad thing in the society. Thank you very much.